And we are live here on a Monday, 2/24/2020, and the markets are selling precipitously. We're going to break it all down for you. It is Tackle Trading's halftime report. We've got myself, Tim, Coach Matt, Coach Mark, and Cody is back from his 2-week vacation where he was working on other projects. It's always good to have you back, Cody. Matt, we got to dive right into it here. There's no question about it. I mean, the reality is big red candles. We are selling precipitously. The news headlines are all saying coronavirus, the fact that it's jumped into Italy. We've seen some cases and deaths there, South Korea, as well as Iran and other areas. You've got a quarantine in Italy. You've got global fear kind of grabbing the markets here. Matt, what's your reaction? What's your breakdown on the chart here?
I thought the Chinese workers were going back to work today.
I saw that too. Yeah.
We've been saying this for a while now that ever since this kind of came out publicly in mid-January, that the market was just underpricing the risk, and they were buying the fact that, they have it controlled and they were going to slow its momentum, and it's just going to stay in mainland China. But, with the cases jumping dramatically in South Korea, South Korea was already in a trade war with Japan. And they were already struggling economically. Japan, we've seen a surge in Japan. They were already struggling economically. You now have Iran, you have the Italian situation. Europe's obviously a concern here as well. And I think the biggest concern from a market perspective is how, especially in China and some of the other Asian countries, how does this impact the supply chains, right? Because face reality, guys. We've seen 80% reduction in car purchases in China. We've seen, I just did an interview with the great Pete Thomas for the Trade and Justice podcast before I got onto the halftime report, and he says, Matt, there's an indicator that I like to look at out of China, and the number one footwear purchase in China is Adidas shoes. And they've just in the last 2 weeks, they've seen an 85% decline in sell in Adidas shoes there in China. And I think the biggest question for a lot of us, regardless of what the IMF said today, they were only expecting GDPs around the world to contract 0.1%, and they were expecting China to contract to 5.6%. I just don't believe that. I think we're in front of something economically that could be, I'm not calling it, but it could be the thing we look back on 5 years from now and say that sparked that next global recession. And how does that impact the United States? From an economic perspective, when we were already slowing down, Apple last week warns of a reduction in guidance. We've seen other companies out of the S&P 500 do the exact same. We were supposed to get growth coming back into 2020 based on what the entire market believed in 2019, and that's just not going to happen now. Companies are going to be warning of guidance, and that's not even to mention a United States dollar that is just on a rip roar over the course of the last 3-4 weeks, where you almost got to pairing at that $100 mark. And we've seen this in recent years, 2015, 2018 specifically, when we saw reductions in corporate earnings. They blamed the strength of the dollar in hurting their exporting. So, with the strength of the dollar, with the slowing global growth, I think we have to be prepared for something that might get a little nastier.
Mark, and this is not a pat on the back, but the reality is we've been all over this for weeks. We've been talking about the fact that they're underpricing risk. Matt has said that. You have said that. We've had podcasts about it, halftime shows. We even had an entire week of content at Tackle Trading on money management, portfolio design, basically because we knew there was extra risk in the market up here. Mark, what do you do if you're out there and you're watching the markets right now, and now it's selling and you didn't do anything to prepare for it? Let's say that you're just long equity and now you don't know what to do. You didn't have a plan and you did not take action. How would you approach this condition, that candle, and this selling right now?
It's tough because, this is where there's one, you need to learn from these lessons in the future, but that's something you can evaluate weeks, months, days ahead of time and be like, oh, I should have listened, I should have done, I've learned lessons, all that. But let's say you're in that situation today. It is particularly tough because these huge, gigantic down days, which over the last 2 years in these type of related ongoing news story events we've seen. Heck, we just saw one a couple weeks ago, right? Where, big down day came down to the 50-day moving average, bounced off. You see these big down days. What is the follow through the following day? Because when you look at it over the last couple of years objectively, is a really tough situation, because those big, huge down days haven't, prompted these nightmare doomsday sell-offs where, the market crashes 20% or anything like that. They've usually found short-term support levels and, whether it's the Fed coming in to save the day and trigger the algos to the upside, or if it's just natural fear subsiding.
Mm-hmm.
Over the last couple of years, we have seen, just like you saw a few weeks ago, short-term support levels form, rallies off of them. Now, if cases in Italy and South Korea continue to spike, all bets off. We've been, for 4 weeks, we've had a couple constant themes. One of them been, this thing isn't over.
Wow.
Like we've said that time and time again. Go ahead, Matt.
The World Health Organization today stopped short of calling it a pandemic.
I saw that.
But they said, and it reminds me when they were refusing in the early stage of this to even call it an epidemic at the time. But they did note that what was happening in Italy, South Korea, and Iran is also very concerning. And how many times we said this is not the ending of something, this is the beginning of something. And we got to be data driven, we got to be technical driven. But the simple reality is, how many times we said in this halftime report, add gold, add utilities, add safe havens. Those things they're protection mechanisms. And the problem with a lot of people is they fail to act on those things, and they just keep pumping money back into the stock market instead of adding safe havens.
Matt, and once again, I don't know if there has been more accurate and spot on analysis of this situation than at Tackle Trading in our various programmings over the last 4 weeks. I really don't. I think, we've been telling people, listen, do not be over leveraged in this situation. Scale back positions, be more cautious, like time and time and time again. Because, it's not that we're health experts, but we're common sense enough to realize that, hey, this wasn't over. Like there was nothing. I mean, all you did was see growth numbers in the virus go up and up and up and take huge jumps up in China. And yet the market was just like, hey, no big deal. Hey, it's just a virus. These things always contain, and last week, Matt, when you were gone in the halftime report, I talked about an escalation principle.
Mm-hmm.
And I talked about, one of the big, huge catalysts. Yeah, market might think that this is the worst of it over or whatever. But if this spreads to another country, you're going to have a market freakout moment.
Mm-hmm.
And what's happening today? Spread to another country, and people are like, oh, wow, this is the result.
If you're a manufacturing company out of Australia, New Zealand, Europe, anywhere outside the US or China, and you do a tremendous amount of business with China, what's your alternative? You have to you have to find some other supplier right now. You have to. Even small businesses, big corporations, you have to find another supplier. And is that supplier going to be the US? Maybe the US is still a strong economy, but with the value of the dollar, that's going to be very, very difficult for European countries, for Asian countries, for Australia, New Zealand, with their currencies plummeting and the dollar rising, fairly aggressively, to really, make those decisions to come into the US. So it's going to be interesting to look at this, but I do want to remind everybody that we're only down like 4 or 5% off the highs when the market went up 29% last year. And it was basically, we've given back the gains we've made year to date, basically.
Well, yeah, and that's the way markets are, Matt. In fact, the point that you bring up there, I think, is really important, because if you back out to different time frames, you see different pictures of this story. On a weekly chart, guys, we're at support on the Dow, the S&P, the NASDAQ. The Dow might be dipping a little bit below it. The NASDAQ still above the higher pivot high, and low on the weekly charts, Matt. So longer term charts are still looking pretty good, don't you think?
Yeah, the longer term charts are, but you are seeing some momentum come out of it from a trend perspective. You're starting to see volatility pick up on the downside. And, we all know this, that the market can give it and the market can take it away. But when it wants to take it away, it does it at a lot faster volatility levels. And as the markets go up, you're seeing reversal patterns on the Dow Jones, in my opinion. You're starting to form a little bit of a, violation of support right there at about 2,800. And if you break 2,800 and you look at this on an intraday perspective, drop it down into a 30-minute chart, you see that volatility on the overnight action pick up, then the market opens up about right here. And initially the market came up, kissed right off that 9 EMA, And now you are trying to just cling to that 28,000 handle. If you do violate that 2,800 handle on the Dow, and I'm probably a little bit more concerned with the Dow than I would be with the NASDAQ or the S&P, which are still above those support levels, you're talking 27, you're talking another 1,000 points away before you get to any other major support level. And so, yeah, could this spin out of control? Maybe, maybe not. We'll have to wait to see what the central banks, how much money they throw at it. I mean, but one of the interesting notes that is coming out of China, guys, is they are literally burning up all their money, like literally by the ton. They're burning up all their cash, and they're going to replace it with other printed new money. So it's going to be interesting to see how much money the central banks around the world throw at this problem.
Like that scene out of Batman, just like big mountains of money. They
are literally burning all their cash.
Oh, that scene like hurt me to watch. Like, just like, oh no.
Well, I get it. I mean, they do. Paper money is disgusting. You know, I think I've seen some science behind it. Cody, right? I mean, that people are dealing. Yeah, it's disgusting. So I get why they would do that. But this is a startling amount of risk that is coming into the market in the short term. And obviously a one-day down where you're down 3.5%, that's not normal market behavior. That is an outlier. It doesn't mean it's a huge crash, but it is a big day in the market. Matt, what we've seen with big days in the market is they can spin into more big days in the market. I got to say something we've always said, though. It's more important to me how it closes today than how it opens. When you're sitting here on the intraday and you're sitting on support, you've had overnight action, you've had global action, you've had all this risk coming through the market, but you're sitting here about 3.5 hours from the market close, Matt. And there's a lot that can happen.
Stay on that hour chart. We go back to that hour chart. A couple things I want to talk about here. For me, in these environments, intraday charts are really the only thing that matter to me. Yes, am I cognizant of longer term support and this and that? But boy, intraday support levels that form, that are tested. I mean, what have you seen with those? You know, there's my 9 EMA on the hour chart, and that thing is a powerful short-term momentum. What's happened on every rally up to the 9?
It's got beat right back down.
Yeah, it gets slapped down.
That's the concern, Mark, is that any buying action right now is going to be met with swift resistance on those intraday charts until we start to see W formations on the intraday charts.
You know, I talked a little bit I did the lounge this morning, Matt, and I talked a little bit, you know, about like a lot of traders get lazy or lack the knowledge of incorporating intraday charts in their decision-making process. And like, they are such powerful gauges of what's going on right freaking now. From a technical standpoint, it's the closest thing to purity that you have. And then when you see those downward moving averages slapping things down, when you see short-term support levels break, it's just a constant barrage of bearish signals. It's why day traders do so well in these environments. Is because these
cleaned up today.
It's because these short-term signals. I mean, go back to that hourly chart. Because these short-term signals just keep pounding. I mean, you go back, you know, earlier, you know, in the futures, you saw a really nice support level break. What happened in the next couple hours? Boom, to the downside. Then you saw a little stability, and when those rallies came up, short-term moving average, slap it down, slap it down, slap it down. And this is what you see on these days. And so if you're even thinking reversal at some point, which I almost need the Fed to come in at this point for me to have faith.
I think you need PPT here.
Like, but we've seen this before. Like,
when did they go limit down, Matt? Real quick, Mark. Sorry, 5%. Yeah.
Guys, that might happen.
It could happen.
But like, watching support levels, watching the short-term bearish, the bearish retracement rallies to slap down. I mean, what happens, this thing just becomes a snowball. What was the initial catalyst, the spread of cases to Italy, to South Korea, that's the initial catalyst that caused the gap. But after that, it is technical analysis, day traders, algos. When those signals are produced, just pounding them to the downside, And until you see that stop, you don't ever even try to guess.
Yeah, until you see a double bottom on the intraday here, until you see a violation of that 9 EMA and maybe even a retracement to retest that old resistance on the intraday, you got to be in sell mode right now.
Like, because guess what? all day traders are. And then of course, and then it compounds when people get out of positions, and it fuels it and it fuels it. Like, but what's tough about this, we go back to May of 2019 on a daily chart. All right, so the last time, and I talked about this in the commodities report this weekend, Matt, and on the lounge this morning, is, and I'm labeling it the escalation principle, so that whenever you have a ongoing news story, whether it's trade war or the coronavirus, and then you have an escalation. In the trade war, it's when in late April, early May of 2019, where both sides were like, well, I'm going to raise tariffs on you. No. And they were talking specific numbers, not just general trade war existing, but
25% on this, 10% on that.
And the market then sells off. And then what happened in late May to cause the reversal and the V-shaped formation that you see on the chart was who came to the market's rescue? Easy market concerns, the Fed. And so, like, during these time periods where you see this escalation, it can cause a pretty good dip. Now the big question I have on mind this morning are two things. One, the biggest concern and risk to the market right now is if you see a huge jump in Italy, South Korea in the next 48 hours, which we saw in China in those early stages. That's going to spook the market. And then when does the Fed come to the rescue? Because they're going to.
Well, guys, in Italy, Mark, real quick, they can't even find patient zero.
I know, that's concerning, big time.
That's concerning.
Yes. Yeah. And by the way, the death rate of this pretty much across the board is 2%, whether it's China, Japan, South Korea, or Italy. They have 4 deaths now, and I think they had about like 400 or 800 cases or something like that. I can't remember. 204 deaths, 2% death rate. It's concerning. Yeah, Matt. And obviously the Italy thing, I mean, that gets into Europe. You've got European trade concerns there. Europe is one of our #1 economic partners. We're dealing with China and even the South Korea one, guys. We have a lot of chip making. We have a lot of technology companies that do business through South Korea. Mark, you're right. If it does not get contained and it expands and the public really contracts the way they want to spend, the way they want to travel, it will have an effect on GDP. Now, Matt, does that spin us into a recession? Might be the thing that we look back. I don't know.
It might be, but I don't think we're there yet. I don't think we're there yet. I mean, the economic data that we saw coming out of Japan and China has been obviously concerning. The supply chain disruption that we're seeing in China with a lot of industrial goods, copper, some of the industrial metals as well has been very concerning. PMI numbers that came out of Europe last Friday were lukewarm at best, but it was just what we've been seeing in PMI numbers coming out of Europe for the last 2 years. So how far does this go? Can it be this situation that we look back on a couple of years from now and say that was the black swan event that sparked this next market sell-off? Maybe, maybe not, but I don't think we're there yet economically in the US. We still are growing at about 1.8% yearly. And to actually have a recession, you need 2 negative GDP reports, which takes about 6 months. So can it be? Yeah, Tim, it can be. We should be safe. We should be cautious. We've said that so many times over the course of the last few weeks. Caution is the word of the day. Caution is the word of the day. Caution, deleverage, add safe haven asset classes, right? Add gold, add utilities, situations like that. And that's really all you can do at this point. I mean, like I said, those long-term investors, guys, let's just have a little bit of perspective on those long-term investors when we're talking about a 10-year price cycle that's been this, and we're only giving up 3% of a 450% metric rise over the course of the last, 10 years. So let's have a little bit of perspective there. But I do think it makes swing trading a little bit difficult.
Yeah. No, and I tried to hammer this point home this morning too, because it would be very easy to mistake if the only time they've heard me or you or whatever over the last few weeks be like, oh, you guys are doomsayers. I'm a perpetual bull. I am a bull bias kind of guy. This is as tough. These type of environments are as tough to the downside trading as they are to the upside because of the back and forth nature of these type of news events. The word and the message over 4 weeks has been caution. It has been, what we've seen historically is when the market has these down times, and I'm thinking specifically back to early 2018, when the market sold off dramatically in a few days on fears of higher wage growth and the unemployment report, which spooked the market, which triggered the algos and a big, huge sell-off. People that were over leveraged coming off a historical bull run in 2017 and January of 2018, max loss wiped them out. Yeah. They aren't trading today. We know individuals personally who could not handle that situation because they were over leveraged, they were greedy, and they just were completely irresponsible. So it's not that, hey, oh, the market, this is it, big doomsday. No, it's like you just be cautious during these situations. That's been the message the last 4 weeks.
Well, and you know what? It might be a really good buying opportunity. We just don't know.
And that's what I said this morning too. Is like at some point, this is likely a good buying opportunity at some point.
Right.
Yeah. You never want to catch the falling knife. Let's let it hit support first, right? Let's not go buy the dip simply because we have an intraday pullback to the 9 EMA. Let's let it hit the ground. Let's see a double bottom, and let's make sure that we're being cautious and conservative here. But Mark, you said doomsday, and yeah, call us whatever you want. I think anybody right now that doesn't buy out of the money calls on Tesla is a doomsday to a certain extent. So but I do think caution and safe haven assets are an important part of a protection in any portfolio. And if you're designing a portfolio all around industrial stocks and technology stocks and energy stocks and these aggressive high flyer type growth based companies, then these days are going to be really, really difficult for you. And they're going to happen. They're going to happen. You go into it knowing full well that you are ultra aggressive. And when the markets get spooked, you're going to be hit pretty hard on that. But Tim, look what's been really, really good for a very long time now.
Gold is just incredible.
Yeah. And, it's, in my opinion, I was talking to Pete about it on the podcast, based on, regardless of whatever the situation is, let's say economically, this doesn't have a disastrous impact on global growth, right? Mm-hmm. The IMF is still projecting about 3.3% global economic growth in 2020. I don't think they're going to come in at that number because I also don't believe China's 5.6% GDP number either. But let's say economically, we just go through a little bit of stagnation here. Well, guys, the Fed's going to come to the rescue, right? The Fed's going to print money. They're going to.
I know. Listen, man, I got to give you a call out because as anyone that knows me knows that I'm a cycle type of buying commodities at the bottom. And I remember specifically on the halftime report, I don't know if it was Monday or Tuesday last week, you were like passion in your voice saying, listen, gold right now as a defensive hedge in your portfolio is a must. Like you were passionate, you were adamant, you're like, and just like, and well, look at where we are a week later from that halftime report.
Well, the breakout of 1600, I was also passionate about that breakout of 1600. But, I asked Pete Mark on the interview, I said, my brother Mark is a historically famous bottom feeding fish in the commodity market. And even he's thinking about adding gold to more positions that, as been seen here. But gold is that safe haven asset that protects against inflation, that protects against economic risk, and protects against downward movements in the market. And everybody should have a certain percent of their portfolio allocated into defensive safe haven assets. And, and the only question I have is, what is that percentage? Is that 5, 10, 15, 20? I mean, and not only are we seeing gold, the actual precious metal, on the rise here. If you look at GDX, which is the gold miners here, you're seeing a breakout of a multi-year resistance level, 3-year resistance level on the gold miners right now. Newmont Mining, a technical 25 stock, is just doing absolutely wonderful in this environment. When you look at the utility sector here, look what the safe haven asset class of the utility sector, and the only thing we're seeing here is another buying opportunity on utilities, in my opinion.
Yeah, and this whole risk on, risk off kind of mentality, Matt, we're seeing it across the board, like you're talking about in the market today. Utilities, staples might even be a good play at some point here. The bond market is rallying, gold is rallying. We're seeing moves into that. The dollar not, though. So the dollar is a little bit of a pullback, but it's
the dollar's just, I see the dollar right now more just as a technical. We were extremely overextended on the dollar, and you're hitting into the mightiest of numbers right there at pairing at 100 on the dollar index. So I think you're seeing more of a profit taking scenario. Let's see how the dollar handles support on that, 99 handle or that rise in 20-day moving average.
Mm-hmm. Yeah, I'm with you. Let's go to oil for a minute here, Mark. And I do want to talk about oil. One thing about oil, and you want to talk about Eurodollar real quick, Matt? Go ahead.
I was just seeing that. Remember when I called for the breakdown of 109?
Mm-hmm.
Just watch how the euro comes back into that 109 handle, and we'll see how that could be a pretty decent trigger if we get some slowing momentum, downward movements in price. Keep an eye on the euro dollar at 109.
By the way, the yen is rallying. It's the biggest currency rallying today. One of the reasons why the dollar might be pulling back is the move back into, that safe haven of the yen potentially. It's up, dollars down, yen is up. Yen is actually up on its index about 1%. So,
and just remind people, there's 3 safe haven currencies: one for the West, one for Europe, and one for Asia. Dollar in the West, franc in the Eurozone, and Japanese yen in the Asian countries.
Mm-hmm. Give me oil real quick here, guys. $2 trillion annual commodity here. One of the most important commodities in the world, probably the most important commodity in the world, much bigger than the other ones we usually talk about in terms of economic size and importance. Guys, that's a bear retracement confirming downward. If you do have global growth slowdown, if you see all these GDP numbers come down here, Matt, people stop traveling. Obviously, oil.
I want to
growth slowdown. There's no
I want
way
to correct you.
It.
That is not a bearish retracement. That is a failed reversal pattern.
Yep, I agree with that.
And once again, listen, I'm sorry. I'm going to get on the soapbox. If you are not a member of Tackle Trading, you are literally missing out. I will put our analysis on the markets against anybody in the world.
Especially in
Plain
commodities.
and simple. I will put it on that. Like, you are not going to find, and over the mainstream media, it's laughable if you're getting your analysis there. Like, if
I just can't wait till CNBC's market and turmoil special report, and then everybody starts buying again.
Seriously, you're freaking idiots.
Matt, I saw a headline over the week or this morning saying that the reason the markets were crashing is because Bernie won Nevada. So that tells you what that's. I mean, come on.
But
I will tell you that Bernie winning Nevada gives him a lot higher chance of getting the Democratic nomination.
That's not why the markets are crashing.
Let's see South Carolina first. But I do believe a Bernie nomination, Tim, and I know you're not going to like this, increases Trump's chances of being reelected.
Yeah, I still think Trump's probably going to get reelected regardless. But yeah,
but
Mark, go ahead.
Getting back to oil. Like, seriously, last week, because this was a classic reversal pattern, forming a little W pattern support, breaking short-term resistance levels, clearing moving averages last week, little bullish, like classic reversal pattern. And what did every single person last week say on oil? Screw that. We're not buying at these levels. This is not a chance in the world.
I think I called it insane in the podcast.
Like, no, we were like, no, absolutely not.
I don't think you can touch oil to the buy side.
No, could you touch it to the short side if you break support though?
You break 49.30?
Yeah,
absolutely, 100%. If that support level fails at 49.30, right there, you're talking 45 is the next handle down, and that's absolutely shortable.
Probably another 10% of the downside.
No, let me give a little pitch here for Tackle Trading. Email me. Go to the store. Get a trial. I literally, like, if you are not a member, then I literally do not know why. I can't think of a logical reason. If the last month of analysis, I mean, my goodness, we spent a week on portfolio protection because of this situation, on not being over leveraged, on being
ago before the volatility.
And that was 2 weeks ago as the market was going back up.
Well, and you know why we were doing that? Because you don't buy portfolio insurance when the market's down 5%.
No, you do it when we were talking about it 2 weeks, teaching those classes. I literally do not have a logical reason other than the fact that I really can't. I really can't. We give great education and we give great analysis, and we try to make our education applicable to market situations.
Mm-hmm. So every week when we're preparing for our content, it's always about what is relevant in the market this week. What things do we need to take action on? this week. And there's no doubt we try to do our best to analyze the markets in real time to give people the proper advice they need to take. But at the end of the day, it's up to everybody as an individual to make their investing and their trading decisions. And I just think Tackle helps them navigate this journey. So there's no doubt about that. Get over there and become a pro member of the Tackle trading community. And honestly, just ask our pro members. Our pro members will pitch more than we will pitch Tackle trading. There's no doubt about that.
Yeah.
Oil, in my opinion, is untouchable right here. But I do want to bring up Palladium very quickly here as well, Tim. One of the reasons Palladium has been on just a meteoric rise, and it's very similar to Tesla. You have some of these Asian countries, going to clean tech, zero carbon emissions, and obviously you need palladium for those types of things. And I asked Pete on the pod here today. I said, Pete, is it over? If we see this if we see that supply chain get disrupted more in China, more in Singapore, more in Thailand, more in Malaysia, more in Japan, more in South Korea, is the rise of palladium? Is this a top? And for the first time, guys, if you remember, Pete literally a year ago said, buy palladium, buy cobalt, buy these industrial metals.
I think
right?
even 2 years ago.
Yeah. And well, every time he's on,
Yeah.
and I asked him, I said, Pete,
Yeah.
are we chasing up here? And he says, Matt, this feels like a fake top. This feels like a top to me. When you had that breakout of 2,400 and then it comes right back down. So he's a little concerned about palladium right now. What I said to him was, let's see how that retest to 2,400 works first. But just keep an eye on palladium at 2,400. If it does break underneath 2,400, we might be seeing some reversal patterns here.
Yeah, definitely. I can't wait to hear the interview you had with Pete Thomas. It's going to be our feature on our podcast today.
Are you kidding?
He's an old guest that's been around for a long time. We love Pete.
Literally 20 minutes before we got on the interview, he was on with the World Health Organization on a conference call listening to all this. Because he has his wife has a background in medicine, and so does he. And so he was had the privilege of being on that. He's not as, don't get me wrong, he's concerned. I think all of us are concerned, but he's not there yet with calling this an epidemic. And so he's kind of there with where the World Health Organization. But the interview ran about 40 minutes. We could have went 4 hours. Me and Pete are just old dogs. When we get in there, we just start talking. And sometimes I just ask a question and just let Pete just ramble, because I just love listening to Pete.
So what's the best case scenario here for the market if you are a bull? Is that these expanding cases are just a natural function of the virus expanding outside of China, that China slows down here, settles in, and maybe they start containing it in South Korea, Iran, and Italy?
Pete said, I think the number is 100,000. If it gets above 100,000 on those confirmed cases, at that point, it's cause for big time concern.
Well, heck, we're almost there.
Yeah, I think so. We're getting close. Gold rallying.
They got to see it contract.
Tim, I want to go through this.
They got to see it contract.
Spend another minute, because I think that's a really good question. So your question was, if you're a bull?
If you're a bull,
which I consider myself a bull.
Don't mind.
What is my best case scenario in having this play out? So you have to see South Korea, Italy, Iran. Obviously, you can't have any new countries where it just is really growing. You got to see those growth rates top off.
Yeah, you got to contract.
And then you got to see the Fed come in too. Like, if I'm planning my best case scenario.
Best case scenario is if, technically speaking, we hold above 3,200 on the S&P and we hold above that 28,000 on the Dow Jones. That's best case scenario. So keep an eye on those, because if those two levels, 3,200 and 28,000, fell, you really don't have another support level till about 3,150. That's a minor support level on the S&P. But we could be looking back a few weeks from now, and we might be kissing off that 200-day moving average, saying this is a good buying opportunity. So we just got to let the data play out. We can't give predictions here. We're seeing the economic data get concerning. We're seeing the market volatility expand. We're setting on major support levels in the marketplace. We got to see those support levels hold first and foremost.
Let's take a look at some stocks here, guys, and work through a few of them as we talk. AMD, obviously, I want to start with this one, actually. One of our most important, one of our most popular companies that we keep track of. We love the company to trade because it's one of the highest volume, very liquid. It's been a semiconductor stock, been a great performer. Matt, obviously, when you disrupt supply chains with the East and technology companies in this sector and industry and chip makers, they're going to be affected. AMD down big here today, not a surprise, right?
All supply chain concerns. all supply chain concerns with obviously AMD, but the semiconductor index as itself. The concerning aspect of the semiconductor, index here is you're seeing a double top and you're seeing a double bottom, which is a reversal pattern.
Yeah.
We'll have to see how that plays out right there at those handles between 240 and 245. But you're seeing reversal characteristics in the semiconductors that will obviously impact the Intels, the Broadcoms, the AMDs, the Microns of the world as well. So Applied Materials as well, obviously.
Yeah.
So that's the concerning thing. But we were seeing that double top before today happened. It was just a continuation of that. I think some other concerns are some of your casino companies like Las Vegas Sands obviously has tremendous business with Macau, and we've seen Macau, expand their confirmed cases. Sitting on the 200-day moving average is Las Vegas Sands. Wynn Resort sitting on the 200-day moving average as well. MGM sitting on the 200-day moving average as well. So your semiconductor companies, your industrial companies, your industrial metals,
Airlines.
Your airlines, obviously.
Airlines as well.
Those things are really, really concerning. I read a report last week that the airlines are expected to miss out on about $34 billion of revenue based on the fact that they've stopped traveling to mainland China and Hong Kong and so on and so forth.
Yeah, and what happens if that spreads? What happens if people, what if people, I mean, look, seriously, who's taking a trip to Italy today?
Nobody is. But Mark, I keep hearing all of this is going to get better, and I keep hearing that the confirmed cases is going to contract, and I keep hearing that the Chinese workers will go back to work today, and I keep hearing all of this stuff, and I'm just thinking to myself, how is China going to grow up 5.6% when they literally have half of their country for the first 2 months of the year in quarantine? And literally, who wants to walk outside, even if the damn workers are back? Yeah. Apple isn't going to have, they're going to have a worker at Apple, but there's nobody in the business.
I got a stat for you, Matt. In the first 2 weeks of February, car sales in China, guess how much they were down from the same period a year ago?
I would say 80%.
92%.
Yeah.
Car sales in China were down 92% in the first 2 weeks of February compared to
same thing with new home
ago.
sales, same thing with consumption, same thing with travel. I mean, Matt, all the companies you named, airlines, casinos, even the cruise lines, they're all just getting beat up bad right now.
Let me just give you one stat, guys. You're talking about the second largest economy in the world, the number one producer in the world, and they're seeing a reduction in everything, and that's China. You've seen escalations in South Korea and in Italy, which is the 8th and the 12th largest economies in the world. And the third largest economy in the world, Japan, just literally last week basically stated we're going into a recession. You've had Singapore, Malaysia, and Thailand also warn of recessionary pressures. Australia, which has been ravaged by wildfires, has shut down production because of the supply chain of China, who they do 30% of their economic business with, is done. And the dollar is at a multi-year high from an economic perspective, where in 2019, we were already slowing down in corporate earnings. Apple has warned of corporate earnings. Other S&P 500 companies have warned of corporate earnings. We're going to see earnings contract at least for the two first quarters of the market this year. And that's in an environment where the market was literally at an all-time high just 3 days ago. I still think we're underpricing the risk here.
I do as well.
I think you just got to live on those intraday charts. I really do.
In the short term, yeah.
In the short term, yes.
In the short term.
Especially the next 48 hours of the trading environment where, because you might see a really nice intraday support level for it.
Well, 3,200 on the S&P mark is my line in the sand right now in the short term. I know it's down there 3.5%, 4% down, but we're going to be testing that, Matt. There's no question about it.
I just remind everybody that we're not just bulls, that we're traders, tackle trading, right?
I thought someone accused us once of just being buy side.
We're buy side.
Sell side. We're sell side analysis. We're Goldman Sachs sell side.
Well, to that point, Matt, there were 12 candidates on the stock report on the bear list today. They all triggered 9 on the options report.
Say something about that. Okay. As a trader, you don't have to pick just one side or the other. You don't have to just pick to be on the bull team, and you don't have to just pick to be on the bear team. Tackle's a bunch of market assassins that are waiting to see who's going to win the war, and we're just going to jump on the winning side. And guys, Some of the biggest opportunities are on the sell side. And if that makes me a doomsdayer, then that's fine. Let's go get rich in this next recession.
No, that's trading. That's just trading 101 right there. Very, very important. By the way, next company I want to talk about is Berkshire Hathaway, because I'll tell you who's not shorting stocks right now. It's old Uncle Warren, Matt, Berk/B there, or the A shares, either one. Who do they always drum up in front of a camera when they need to calm people
Uncle
down?
Warren.
Warren Buffett. Over the weekend, he actually released his annual letter, which is very, very popular annual letter for people to go out there and read. Berkshire Hathaway's annual letter. On CNBC this morning, Matt, he basically said this: stocks are going to outperform bonds over the long term. Don't get worked up on the short term news. If interest rates stay low and corporate taxes stay low, he's still going to buy companies. Okay.
He's not wrong.
Yep.
Okay. They're going to actually see a reduction in the interest rate, in my opinion. You're going to see money come into the market through more repo actions and more quantitative easing. And where the bond market is right now, I agree with that. Low tax rate for corporations with a low interest rate for borrowing perspective over the next 10 years. Yeah, I'd bet on stocks more than I bet on bonds. No doubt about that.
Mm-hmm. Yeah, obviously he's got a different timeline than a trader does. I mean, he's not watching the intraday level to go out and short day trade right now. Warren's more of an investor, value investor, all that kind of stuff. And with where those yields are in the bonds, who's buying a bond right now? 1.3% on the 10-year yield. In fact, the 10-year 3-month, I know it's not the recession indicator, the 10-year 2-year is, but it did invert today, Matt. More risk in the market. There's no question.
And let me just remind Matt, who said crypto is 24/7 is the future. I highly disagree with that. So is the Forex market, and so is the futures market. And those markets dwarf the net value of the crypto market. One trading day in the futures market is like 1 year in Bitcoin.
Yeah. Yeah. By the way, Coach Gino did pop in here. Gino, come on in here if you've got anything you'd like to add to our conversation. How you doing, brother? What are you doing today, Gino? I mean, you're a trader. You're focused on the short term. You're running accounts. How are you approaching the volatility? What kind of messaging do you have right now for our audience?
Actually, I am sitting on my hands on a lot of trades, and best thing to sum it all up, Tim, if you go to my stock report I did on watching the intraday charts and watching the market open in the futures, surprise attacks like this in the morning, you got to be ready for which side of the market to be on. Great market for day traders, though.
Yeah. Yeah. Short-term trading.
It's been a great month for day traders.
Yeah. Yeah.
Like it's funny. Some people, now I have a question specifically for you. So we've been over the day trading's been great. Okay. Gino, you are really famous for out of the money naked puts on a variety of things, on major indices, on oil. This has been a go-to bread and butter, and it's obviously been great for years and years and years. How are you approaching that specific strategy on a day like today?
Yeah, that's a good thing is the strategy is out of the money. And I've been talking to a lot of students this morning. What do I do with my bull put? It's in the money. What do I do? I'm not getting filled. The bid-ask spread is $4 wide. Panic, panic, panic. Take a deep breath. Take a deep breath and say, what did I learn from this mistake? Mistake was this. First question I asked is, so what kind of insurance do you have? There's not that much insurance on a bull put spread. You have a long leg fixing your risk. But what about that put spread going into this market? What about that short-term long put, like the ones I was talking about 3 months ago when we're at record lows on the VIX? What about those 5-cent puts on the SPX that I bought every week, 45 days out? Every week I bought some in insurance because I love the strategy of selling after I buy my insurance. Do you know, Mark, when you go into a Ferrari dealership or any big sports car dealership, they will not even let you test drive the car until they check your insurance. If you can't afford the insurance, you don't do the strategy, period.
Well, and that's a very important point, Matt. You brought it up earlier. I mean, when the markets were at all-time highs, that's when you hedge. You don't hedge when the market's down 3.5% on a Monday morning. You needed to build a plan and have the skill sets to do that over time. That's kind of what Gino's talking about.
We talk about bear market strategies and protections quite a bit, in our community, our pro member community. We do a mastermind group every month called Bear Market Survival Guide Mastermind Group. We have a system called the Bear Market Survival Guide, and I'm willing to bet that the people that attend those mastermind groups and have watched those videos and completed the homework for those videos and everything. They're a lot more prepared today than people who were basically just buy side mechanics.
Yeah. 3214 on the S&P 500 here. Matt is breaking down on the intraday what I said earlier. I'll stand by. I think the close here is going to be very, very important for the marketplace. It's what we're going to be watching. We're currently just in that precipitous downtrend. It is riding the lightning. I don't know who would buy down
Who's buying today?
Well, you just broke another support level 10 minutes ago.
Yeah.
Yeah. Who's buying? Floor's coming out. We gotta let it simmer down. We gotta let it fall. We gotta let it hit the ground, double bottom, double top, and then we might have a good buying opportunity, but that is not right now.
Yeah. Guys, if you want
Wednesday, it could be Thursday of this week, right?
Yeah.
But it's not today, not in my opinion.
I agree with that. Price confirmation across different time frames is a very important skill set to learn. Obviously, these intraday charts are what you're going to be watching on the intraday here today as we head into the close. And I don't know who would buy. Maybe market makers short covering. I don't know, but I can't imagine.
There could be short covering coming into the close. I wouldn't be surprised by us coming off the lows in any capacity, but that is not people buying. That is shorts locking in profit. There's a big difference in those two.
Yeah. By the way, if you're watching our show right now, we're building a great audience out there. Picked up a few 400 or 500 subscribers, I think, in the last month or so.
By the way, Tim, Pete Thomas, he's coming on the halftime report on Wednesday of this week, and I'm
excited.
Oh yeah,
come on to the halftime report.
In fact, you know what? You said who's buying, Matt? That's interesting you say that. When you see a big sell-off like this, I like to look at the highs versus lows. It's like, what's making new highs in a market like this? What, like if you look at your 52-week highs or monthly highs. So I pulled it up on the internet here, and most of the companies, guess what they're related to? Gold, metals, a couple of healthcare, of course, right? But healthcare and metals and REITs. Mm-hmm. So that's where the money's going to flow somewhere. Even if it comes out of the market, it's going to go somewhere. So I like to track where that goes. And if you look at I
like that utilities chart more than the REITs chart, by the way.
I do too. I think, I do too.
Yeah.
So interesting.
But everything goes down on days like this, though. Mm-hmm. I mean, even utilities at this point is down 1%. It was only down 0.5%, just like literally.
Yeah. I mean, algos, they pound everything.
Everything sells on a day like today.
Mm-hmm.
No. When this stables out, I think we are all in agreement that utilities is a nice pickup once the worst of it is over on the sell.
Everything sells. It's a matter of what recovers the fastest, right? Yeah. And usually what recovers the fastest is safe havens, as people come into those safe havens to kind of as a hedge or a protection against that. And I do want to remind people that there's a lot of ways to hedge a portfolio, not just with put options in the S&P 500. But, I'm looking at a company today, Tim, and I'm interested in a company today. And we've talked about this company quite a bit here. When everything's selling, I guess we're going to need more Zoom telecommunication technology here.
Isn't that amazing?
2.56%.
Speaking of that, Matt, the what's behind that is what? The online, right? I'm looking at the 52-week highs. There's actually a Chinese company up 20%. You know what that is? Online education. Because think about it. They're not going to
EDU.
Yeah. COE.
Oh, COE.
Yeah. All those. Yeah. Because they're going to online. It's you don't have to go to a physical classroom. But that's where it is. That's what we're doing right now, online. People want quick information. They want it now. They want it to be.
I love the Zoom chart. I don't know the COE chart. It's obviously here. It's exploding. But that Zoom chart, Matt, I think coming back to this one, we got earnings coming up. Short term, probably not tradable in front of the earnings. No. But obviously, the W pattern breakout, rally, run.
We had that on the options or stock report a couple of weeks ago, didn't we?
Sure did. Yeah, we nailed that breakout. We've had it a couple.
Also nailed that reversal.
Yeah, it's a wonderful company. It's on our watch list for a reason. And Matt, it does make sense, not just in 2020, but moving to online. We're on Zoom right now.
We're on Zoom right now.
Yeah, we use it all the time.
And it's not going to work out very well. Exxon breaking $60, and that was on the options report, I believe.
I believe it was. Yeah. Exxon and energy, they've been some of the more bearish areas of the marketplace. They're down. By the way, we do have some key earnings this week. Tonight, Intuit, who, by the way, is also in a merger. They're going to buy out Credit Karma for $7 billion. They report their earnings tonight. Tomorrow, Home Depot is really the one I'm going to be watching for. And then, Matt, one of our favorites, Salesforce.com, tomorrow after the bell. Couple of economic data points. I did see the consumer confidence numbers, Matt, but really a lot of this stuff is going to be global economic data this week. it'll be interesting to see if the Fed comes out and does anything in the short term. I
was
don't know.
gonna say this one's a big one though. Chinese manufacturing PMI numbers come out Friday night.
That's a big one.
That's a big one.
Yeah. Good job today, guys. Let's wrap this one for today. If you're watching our show right now, as always, welcome. Thank you for being a part of our community. If you've not subscribed to Tackle Trading's YouTube channel, click the subscribe, click the bell, come and join us each and every day. We go live, 12:30 Eastern time. Every time the markets are open, come and have some fun with us and break down the markets. If you're out there and you're a student, it's time for you to put your butt in the seat. If there's something you don't understand, if there's some risk that you're not in control of, it is really time to get back and commit to education and get the skills that you need. Great job today, Mark. Matt, we've got our podcast today, and I am looking forward to that. We always drop that over on tradingjustice.com on Monday evenings. Maddie, anything else?
Nope, we're out.
See you guys tomorrow.